Hey everyone, welcome back to Corporate Decoder, the place where we uncover what is really going on behind those shiny corporate reports. Today we are diving into Leader Funds Trust's latest filing, and let me tell you, it reads like a financial detective novel with a few twists and turns that might just surprise you. Before we get into the nitty-gritty, if you love getting the real scoop on how businesses are doing, make sure you hit that subscribe button. And hey, we've built a fantastic community over on our Discord server all about decoding these documents. Link is in the description below. So what exactly is Leader Funds Trust up to? Well, they manage a couple of funds, specifically the Leader Capital Short-Term High Yield Bond Fund and the Leader Capital High Quality Income Fund. Think of these as different investment buckets that investors put their money into, hoping to grow it. These reports are basically like a yearly checkup, showing how well these investment buckets performed over the past year, up to the 31st of July 2025. Now, when you put money into a fund, there are costs involved. It is not just about what you earn, but also what you pay to have your money managed. For a hypothetical $10,000 investment in the investor class shares of the short-term high-yield bond fund, the cost for the year were about $173. That is 1.63% of your investment just going towards fees. For the institutional class shares of the same fund, that cost was a bit lower, around $120 or 1.13%. It just goes to show that fees can add up, and sometimes choosing a different share class can save you money over time. This is like choosing a streaming service. Some tiers cost more, but offer more. Others are cheaper, but might have fewer features. But how did the money actually grow? Looking back over the last 10 years, the short-term high-yield bond fund investor class shares have turned that hypothetical $10,000 into about $12,000. That might sound okay, but it is important to compare it to something. Their benchmark index, the ICE Bank of America 1 to 3 year US Corp. GOFT index did a little better, turning that $10,000 into about $11,600. When your own fund does worse than the benchmark, that is a red flag, meaning that the market itself would have given you a better return without all the management fees and costs. Let's look at the average yearly returns. For 1 year, the investor class shares of this fund did pretty well, returning 11.76%. That is much higher than the Bloomberg US Aggregate Bond Index at 3.38%. Digging deeper, the ICE BOFA 1 to 3 year US Corporate and Government Index returned 4.70%. So, in the short term, this fund was a star performer. However, when you look at longer periods like the past 5 years, the picture changes. The investor class shares returned 8.10% annually, which is still good, but the ICE BOFA index delivered 1.56%. And over the past 10 years, the fund's annual return was 3.10%, while the ICE BOFA index managed 1.85%. This tells us that while the fund had a great year recently, its long-term history is more of a mixed bag compared to its benchmarks, and the higher fees it charges likely eat into those long-term gains. It is like a sprinter who had a fantastic race today, but struggles to keep up in the marathon. What drove this recent success? The report says they focused on floating rate securities like CLOs, which is basically a way to manage risk and reward, especially in a high interest rate environment. They also use a mix of top-down and bottom-up analysis and check lots of technical indicators like moving averages and RSI. It sounds like a pretty complex system, aiming to navigate the market rather than just predict it. Looking at specific investments, some really helped boost the performance. Flagstar Financial Incorporated, Marathon Cloakseat Limited, and Octagon 69 Limited were among the top performers. These were the rock stars that really carried the team. But, of course, not every investment is a winner. VTB Bank PJC via Eurasia DAC in Ukraine 1.75, the 1st of February 2029 were big drags on performance. When you see a security like VTB Bank, especially with the ongoing geopolitical situation, it makes you wonder about the risk they're taking. Across both funds, total net assets are impressive, well over $150 million for the short-term high-yield bond fund and over $1 billion for the high-quality income fund. This means a lot of people trust these funds with their money. Now, what are they actually investing in for the short-term high-yield bond fund? A whopping 88.35% of their assets are in collateralized loan obligations, or CLOs. This means they are heavily invested in these complex financial products which can be rewarding but also carry significant risk. Think of them like loans that have been bundled up and sold off. The fund also has a smaller slice in financial companies and mortgage-backed securities. Moving over to the Leader Capital High Quality Income Fund institutional class shares, they returned 6.03% for the year. That is better than the Bloomberg US Aggregate Bond Index at 3.38%. But again, when you look at the 10-year mark, the fund did 4.66% annually, while the index did 1.66%. This fund seems to be doing a better job of outperforming its benchmark over the long haul, and it has a much bigger asset base, over $1 billion. For this fund, Key contributors included floating rate clause and some investment grade corporates like Pemex, which is a Mexican state-owned oil company. This shows a diversification beyond just clause compared to the other fund. Now, something interesting happened with their auditors. They've switched from Sandville and Company to Tate, Weller and Baker LLP. This isn't necessarily a red flag, but often companies change auditors when there is a disagreement or a need for a fresh perspective. The report states there were no disagreements, which is good, but it is still a change to note. On the audit committee, they've got Martin Kehoe, who is considered an audit committee financial expert. That is important for oversight when you are dealing with complex financial instruments. His independence is also confirmed, which adds a layer of confidence. When we look at the audit fees, the total for the year ended the 31st of July 2025 was $48,000. What is notable here is that part of that fee went to the old auditors for restating prior year financial statements. This hints at some adjustments needed for past reports, which can sometimes stem from those NAV errors we saw mentioned earlier. Now for the really juicy part, the schedule of investments. This is where we see exactly what each fund owns. In the short-term high-yield bond fund, remember that 88% in clause we talked about? Well, this schedule shows us some of the specific clause they invested in, like Allegro Clo Vs Limited, Bain Capital Credit Clo 2019-1, and Dryden 45 Senior Loan Fund. These are all significant holdings. They also have a position in Ukraine Government International Bond, which certainly raises an eyebrow given the current geopolitical situation. In the Leader Capital High Quality Income Fund, the Clo concentration is still high, around 74%, but they've also got a significant chunk in commercial mortgage-backed securities, around 12%, and some corporate bonds, including a big position in Petróleos Mexicanos, the Mexican oil company. This portfolio looks more diversified than the short-term high-yield fund, fitting its high-quality name. Remember that VTB bank from the detractor list. The report says it is valued at 0. This is a pretty stark indicator of the risk associated with that investment, likely due to sanctions and the ongoing conflict. It is often hard to get any money back from such investments. The High Quality Income Fund also lists Boxable Incorporated, a company that was in litigation with the fund as having a valuation of 0. This seems to indicate the fund had to write off its investment there, likely due to the underlying value disappearing. Now, let's talk about that NAV error mentioned earlier. It seems there was a significant accounting mess-up related to valuing certain securities, particularly VTB Bank. This error sent ripples through the net asset value calculations, affecting how much people got when they bought or sold shares. The fund's advisor had to reimburse the fund quite a bit of money to make shareholders whole. This is a serious operational issue and points to a need for better internal controls. Looking at the bottom line, the net investment income is positive for both funds, showing they are generating income from their investments. The high yield fund generated about $12 million, while the high quality fund brought in a much larger $63 million. However, when we look at realized and unrealized gains and losses on investments, the picture is more mixed. The high yield fund had a net gain, but the high quality fund showed a net loss of over $3 million from these investment changes. This highlights the volatility within these portfolios. The total net assets for the high yield fund ended up around $154 million, while the high quality fund is a behemoth at over $1.2 billion. These are substantial amounts of money being managed. The total return for the investor class shares of the high yield fund was a strong 11.76% for the year. This is largely thanks to that great short-term performance. The high quality income fund's investor class shares saw a 5.63% return, and its institutional class shares got 6.03%. Digging into the sector allocations, the short-term high yield bond fund is heavily concentrated in collateralized loan obligations at 88.35%. This is a really concentrated bet. The high quality income fund is also heavily invested in CLOs at 74.80%, but also has significant exposure to mortgage-backed securities at 12.54%, and a notable chunk in cash and cash equivalents at 7.44%, which adds some stability. Some key fund statistics show a portfolio turnover rate of over 182% for the short-term high-yield bond fund. This means they're buying and selling a lot of securities, which can lead to higher transaction costs and taxes. The high quality income fund has a turnover rate of 132.76%, which is still quite high, indicating active management. So here is my take. Leader funds trust managers substantial sums of money, and for the most part their funds delivered positive returns, especially in the past year with strong performances from the short-term high-yield bond fund. However, there are some significant concerns: the heavy concentration in CLOs for both funds. Particularly the short-term high-yield bond fund represents a substantial risk if that market takes a downturn. The VTB bank situation and the NAV error highlight some serious internal control and valuation issues that need to be addressed. While they've switched auditors and seem to be cleaning up, these kinds of errors can erode investor confidence. The fact that they are heavily into CLOs, which are complex, and simultaneously had significant valuation and accounting problems, is a bit of a worrying combination. The high-quality income fund seems to be slightly better diversified and has a stronger long-term performance record against its benchmarks, but still carries a significant CLO weighting. Overall, while the recent returns are attractive, investors should be aware of the concentrated risks, the past accounting issues, and the high turnover rates. It is not a set it and forget it kind of investment, and a deep understanding of CLOs is definitely recommended if you are considering putting your money here. It feels like a fund that is trying to chase yield, and in doing so takes on a lot of risk, both in its investments and in its operational integrity. Alright, that is our breakdown of Leader Funds Trust's latest filing. What do you think about their CLO-heavy strategy and those accounting hiccups? Let me know your thoughts in the comments below. If you found this deep dive valuable, give this video a thumbs up and subscribe for more corporate unraveling. And seriously, join our community on Discord. Link is in the description. It is the best place to continue the conversation. Thanks for watching, and I'll see you in the next video.